Welcome back into this lesson, and in this lesson we'll be discussing on why you should trade gold. So I know that many traders like to trade this pair, the gold, and yeah, the gold is a good market because most instances it's always buying, since for like when we can see that for a long time, or even if you look at past data for over 10 years, 5 years, 20 years, 15, we have just been buying gold and will probably continue be in a bullish market in gold for a while. But also I can advise that however as much as you want to trade this pair gold, you have to be cautious of when we are not aligned with the other pairs like the dollar index and the indices. So first of all, I know that you like, maybe you can write your opinion on why you prefer the gold pair, but I would advise that first do your intermarket analysis to know when to trade this pair gold, because for example in some instances, if you are a trader and you thought of buying this market, for example in August 2020 you thought of buying this market, how long, for example just here, I know it's easy to say you just wait, but how long is long enough? Because we see that 2021 the market was selling again. 2022 we continued to move lower, then 2023 in a way we moved lower. So you'd have waited for 2 years, almost 3 years before, let's say 3 actually, 3 to 4, 3 years for the market to, or for you to start making profit. So do you have that? You should ask yourself, do you have that patience? If for example you're a position trader and you like holding gold setups for maybe a year or 2 years, maybe you have that patience. But for anyone who is a short-term trader, a swing trader, or a day trader, or a scalper, you should know that not every time is a buy gold time. So I would advise that the time that we need to buy gold is when you have done your higher time frame analysis to confirm that we are in a trend of buying. And most of these trends are usually confirmed by weekly and monthly PDRAs. So for example, let us look at that time in which we were consolidating. We see the weekly chart just had these imbalances which were traded into, but no dynamic move or expansion occurred. So let us look at the monthly chart during this period, and we see that between 2012, 2011, almost end of 2011 towards 2015, it was a time that we were selling in gold. Yeah. So however, as much as this is a bull's market, you have to just do your higher time frame analysis, and also remember that even these sell trades can be good for you, because I know that for example when gold decides to move, it moves for sure. Yeah. So around this time we had this imbalance in the monthly chart, so it's like I think we consolidated more along this imbalance in the monthly chart, we just stayed along this area for, we have seen it's 3 years there. But once we have these scenarios in which the higher time frame, like the monthly, supports the order flow, you see how really well that the gold pair pays. And also the gold pair can also hurt you, especially if you over risk, and especially if you are trading against the higher time frame order flow. So just be cautious of the high time frame order flow, and it will go well with you. Yeah, it will go well with you. So like from this weekly imbalance, the movement between just this distance, however ticks they covered, it will pay you really handsomely. But if you are trading against the high time frame order flow, it will hurt you. So just be cautious with gold. That's my advice. And also ask yourself, why are you trading the gold? Is it because of the pressure? Because you see people out there making money with gold? Or why? Why? So yeah, gold is a good pair to trade, but you just have to master it, and yeah, you'll be profitable. And by mastering it, I'm saying that you have to do your intermarket analysis. So study more on intermarket analysis between gold and the dollar index, and also the indices and commodities. Yeah. So yeah, that's it for this lesson, and I wish you all the best in your trading.